Welcome to another day in the Matrix. This is Red Pill Podcast 131. I hope you're all having a beautiful weekend out there. We have a lot to get into today, so I hope you are ready for these gems. So before we get started, just a quick update. Tomorrow I will be releasing my newest presentation titled The Great American Eclipse Decoded. So stay tuned for that. It's going to be packed with gems as usual. And I cannot wait to get some of your feedback on this because it's going to be mind-blowing how many connections to this particular month of October I'm going to be getting into. And it's preparation for the rest of this year. So again, welcome to the Red Pill Podcast. Get relaxed, get comfortable, grab yourself a cup of coffee or tea if it's the morning time, or a glass of wine or beer or any beverage of your choice. If you are new here to the Wolfpack, welcome. If you have yet to get access to our Discord server, just make sure to send me a direct message on Patreon with your Discord username and the last 4 numbers after your username, and I will reply back to you with a Discord server invite and a Patreon message. Make sure to follow those instructions. It's the only way I could get you into our Discord. We're doing also very amazing with our coin voting system for the altcoins. Again, make sure to comment inside of this Patreon post with the altcoin and the ticker symbol of the altcoin that you'd like me to review next week, and whichever ones get the most thumbs up, the most votes, we will be selecting for next week's Red Pill Podcast. This week we have a very special episode because we need to go over the stock market into this recent monthly close, as well as gold and silver. And we'll be going over Bitcoin, Ethereum, XRP, and then into the altcoin section, talking about Caspa, LCX token, Avalanche, and Dogecoin. So we have a jam-packed episode. I'm not going to be spending as much time on the dates today because I'm going to be going over a lot of that stuff in tomorrow's new release, The Great American Eclipse Decoded. So let's get into today's episode. We're finally here in this month of October, which should be our 8th month in the system. Remember, like an octagon has 8 sides, it makes no sense for this to be the 10th month in the system, but the Gregorian calendar is a scam, and you've come to realize this. So Oct 8. And this is important because this sets the tone of some of the code that we're going to be getting into today, and I just want you to keep this in mind for the rest of this month. So we're here, October, we have this 8 code. I've been preparing our community for a very long time for this month, specifically for this upcoming solar eclipse on October 14th, which is less than 2 weeks away now. It happens to be right near the end of the Hebrew month Tishri, and we are aware of this month in particular because that is Rosh Hashanah at the start of Tishri, and that transition from Elul into Tishri on the new moon. And this particular time frame transitioning out of Tishri into Heshvan, maybe I'm pronouncing this improperly, I apologize if I am, correct me in the comments, and I will do my best next time. But I want to get into revealing some of this code because I've talked about this already in prior decodes, but this transition out of Tishri into Heshvan. And let me show you the code. Technically, this would be on sundown of what we are calling October 15th. So, quick recap. Friday the 13th, you guys all know about that. Then we have the weekend, solar eclipse on the Saturday, followed by the 15th, which at sundown that day would be transitioning us into the next Hebrew month. So consider this October 15th. Going to be coming over to here, 10:15, and you're going to see some very important code, one of which is this: days left in the year, 77 days. So I would like to quickly go over, excuse me, a little bit of a glitch here. Things happen when you're freestyling. Okay, we're back at the 15th. And I just want to show you really quickly 77 days left in the year, and this is mind-blowing, okay? When you write this Hebrew month out in English and you type it into your gematria calculator, you're going to get 77. So there you go, very powerful connection. Heshvan equaling 77. This day at sundown on the Sunday would be transitioning you from Tishri into that month, leaving 77 days in this year. It will be the start of the on October 16th. Now we're just trying our best to collaborate on the systems, combining the two together to strengthen our decode. And what we have is October 16th kicking off the 42nd week of this year. All right. Keep that in mind. So 42nd week of this year, we've been talking a lot about this number 24 and the number 42. Remember, we're going to be we are in the Hebrew year of 5,784. 5 plus 7 plus 8 plus 4 adds up to 24. The mirror of 24 is 42. And that is tied to the week pretty much before we have that solar eclipse leading into that week. So pretty wild to see how this is all coded in. And I have so much more to share with you guys. But I thought it was pretty cool how the name of this month is at that perfect pivot point and transition between the eclipse, Friday the 13th, before that, the actual day at sundown, moving into the 42nd week of this year. So, powerful code already. October 16th, naturally, the day leaving 76 days in this year. And 7 times 6 is 42. And that is the date that starts the 42nd week of this year. Some even say that 42 is the number of the universe. This date also happens to be on a 69 date numerology. It's tied back to this key date we've talked about many, many times, March 10th, by 220 days. That's the 22, Master Builder, Master Destroyer. You see, that was the 69th day of the year, the day Silicon Valley Bank failed. And I just want to show you how we were talking about the 76 right there and how this is 7 months and 6 days apart. And where do we get these 76 connections? Well, we get that in Ripple equals 76. And we were also talking about XRP. When we talk about Ripple, we have XRP gives you 15 in Chaldean. You can see that's a 15 standard date numerology. And you all probably remember July 13th of this year, the day that XRP went up almost 100% in a single day. It went up actually 73% by the time that was all said and done into the daily close. I think that 73 is telling you something because remember, 73 is the 21st prime number. 21 ties back to Saturn. Also, 3 sevens, 777 is 21. No matter how you work it, it's tying back to that Saturnian energy. If you were to type the month in Gregorian internationally, it would be 137. 137 is your 33rd prime number. When you take between July 13th and you take October 16th, the day we've been talking about, you can see it is 3 months and 3 days apart. 33. And we know this 33 is tied to XRP because its current all-time high is $3.30. Mind-blowing. And look at this code of 95 plus the 33, and that's perfectly coded into Ethereum, equaling 95, and the ticker symbol of Ethereum, ETH, adds up to 33, as well as the 15. It's written all over this, 15, 15, 33, 33, Ethereum 95, 95 days apart since the day XRP was essentially no longer deemed a security. Pretty massive stuff. And I want you to see right here, we have even a little bit more code to add to this. I just thought of this now. We have 13 weeks and 4 days. That's 134. We get that 134 in Ripple XRP 134. And you notice something? In Chaldean, this adds up to 42. And this is the exact date that starts the 42nd week of that year. XRP's logo is the X. X is the 24th letter in the alphabet. You flip the 24, you have the 42. What a coincidence. But you guys know the truth. And when we speak about 42, let's speak it out, right? 4 twos. So we'll type 2, 2, 2, 2. And that is 8. And we're in the month of October. Like octagon has 8 sides. It's the 8th month in the system. And some of you might remember I once talked about Octavian in my decodes earlier in this year. I forgot which one, perhaps a couple of them. I think it had everything to do with the blue moon, so perhaps check that one out, I think. That or Fed Now. But I was talking about Octavian, who is Caesar Augustus, where we name the month of August. But there was code in there with Octavian because the name is starting with Oct, and his birthday was the 23rd of September. And that right there is the transition from Virgo into Libra in tropical. And I think this was revealing something. When I count the zodiac signs, I always start with Pisces. So we go 1, 2, 3, 4, 5, 6, 7, 8. Your 8th sign transitioning you into the month of October. And no matter how you cut this up, whether it's sidereal or tropical, you're having the 8th sign in that October month. So the Gregorian system is just to confuse people. That's all. I just wanted to point that out. That 8. Remember, the 8 symbolism is the analemma. It's the natural movement of the sun and the moon. This is balance. This is scales. All right? You as a human being are balanced by the daylight and the night time. You have the greater light, the sun, and the lesser light, the moon. It's all about balance, though. Sun, moon, gold, silver. Libra is everything in this. So I just wanted to show you guys the power of this code and how we've combined all these decoding systems to get to this very moment where we type in Libra and you're going to see it's 42, the mirror 24, right back to where we started. The scales need to be balanced energetically, and that time frame between sidereal Virgo into Libra is crucial for this market. And you'll get way more gems when you watch the Great American Eclipse Decoded tomorrow. Remember, what an eclipse is a sun-moon ritual. It has everything to do with the analemma, the figure 8 pattern, 8th sign, Libra. Think about this, guys. So we're in those crucial final moments, right? There's a lot of confusion, and I think this is the perfect time for me to review a very important Bitcoin pattern that I discovered. We're going to be going over here to the weekly chart. And this is going to be really amazing, this particular gem I'm about to get into. So please take notes on this. What we want to focus on today is the second eclipse in a solar cycle, the second solar eclipse. So we're going to go all the way back to over here. You could see we started the solar cycle, second eclipse, we have solar cycle, second eclipse, solar cycle. You see what I'm saying, right? So just keep the second eclipse in mind for today because we're approaching our second eclipse of the solar cycle we're in right now. And that will be on October 14th, just weeks away. So we really want to focus particularly on that. Well, let's just quickly review what this is all about. Before we start a solar cycle, we have a bottom. Before we started the solar cycle, we have a bottom. Before we started the solar cycle, we have a bottom. And before we even started our recent solar cycle right here, we have a bottom. It looks the same every time. After our bottom, we rise into the solar cycle. Bottom, rise into the solar cycle. Bottom, rise into the solar cycle. Again, bottom, rise into the solar cycle. Without fail. This is not something to be sleeping on. This is why a lot of these so-called top-level TA experts, they have a hard time with some of these ideas. I don't know why. I know that they call it woo-woo, and they want to like almost troll it and make fun of it. But when you see the cyclicality and the nature of how this market moves, you can't deny these patterns. It would be silly to. So I know that here you guys have the eye to see. You're here to accept these different perspectives and a deeper truth. That's why we're here. That's why I love you. That's why I'm grateful for you, because you're here to develop and expand consciously. You're not just stuck in the rut of belief. These are truths, and you just have to see it for what it is. So moving on, we have a pattern here that's clear, even to today, where we have our bottom, we've moved into a solar cycle, and now we want to talk specifically about this second solar eclipse, which tends to be a pivot point. All right, so we're going to go through this one by one. I'm going to go back to here, okay? So we have, look at this, we're flat, solar eclipse, flat, moved up into our third eclipse. Let's go to the next cycle. Flat into the eclipse, flat out of the eclipse, moved up into the third eclipse. This is your anomaly, but it actually is still consistent. Flat into the solar eclipse, you can see it's almost the same amount of trading weeks. These are weekly candles. Then we went up, had our dip, still ultimately holding structure into our next solar eclipse, third. So this is one of the anomalies. The reason this is really strange is because we don't have a moment like this too often. The last time we had this dramatic of an effect on our markets was probably back in 2008. This is 2020. So there was a long time frame between that. The last moment that would be considered is maybe something like the dot-com bubble or 1987. But these don't come around so often, and specifically this correction, because it was a black swan event that changed everyone's life on the world stage, probably the most dramatic, life-changing experience since World War II. We could all agree on that. And when we zoom out, we see something though. Even with that being said, even with this anomaly, we still held structure. We held our higher low structure. So I don't want to bet against this bottom being, or like, I'll just say it like this. I don't want to bet against this as our bottom, meaning I don't think we're going to be going lower than 15K. It would take something very weird, but of course there's a first for everything. I just wanted to get that out of the way though, because too many people probably are considering things like 7K and 8K Bitcoin. I've even heard it in comments in my recent video, and I'm flabbergasted by that. But getting back on track here, we have this pattern of being sideways into the eclipse. Look, sideways into the second eclipse, sideways into the second eclipse, sideways into the second eclipse. We're not doing anything different than before. It's the same thing, even the same amount of weeks. All right. I want to also zoom in a little bit more on like the daily candles and show you how we interact immediately after the solar eclipse. So look at what Bitcoin does. We probably had one trading week. We started moving up. Here, it was literally flat, and we literally just started moving up right out of it. Over here, immediately up. A little bit of a dip before. That's a pattern. I think it's about 21 days before. Yeah, you got about 17 days. 17 days. Fuck. A little bit more. Here was a little closer, about 8 days. Again, this was an anomaly cycle though. So if we took about 1 week to 17 days before, let's see where we're at. It's probably like now. So that puts us on October 6th. All right. 17 days before was the 27th, which was technically a pivot low before we shot up a little bit more, but there's no change in structure because you have lower high, lower high, lower high. We haven't really broken or reversed anything until we break this level right here. We'd have to see Bitcoin closing a daily above 27,800 to be calling anything a reversal at this time. I just want to let you know that. Anything below 27.8 or just call it 28K is just we're continually planting lower highs. So don't get too excited yet for this little move up. We're generally sideways around this time, and that's definitely the case as we're seeing it today. Just wanted to point this out. I think this is really important stuff, all right? Even with the black swan considered over here in 2020. So our third eclipse in this current solar cycle is on April 8th, 2024, a very important eclipse I talk about a lot, and that'll be talked about mostly on tomorrow's new Great American Eclipse Decoded, and I'll also be coming out with another decode for the April 8th eclipse in early 2024 as well. This tells me that we can dollar cost average around this upcoming solar eclipse and continue that until the end of this year, which is pretty much what I've been saying this whole time. But let's see how the last cycle for... Okay, wait 1 second. We want to consider Ethereum, right? Because some of you are like, well, where does altcoins fit into all of this? And I respect that. And I think that's an important thing. And I've had it come up as a frequently asked question regarding our solar cycle and solar eclipses and what the alts do versus what Bitcoin does. And I want to do a quick experiment here. We're going to go back to 2016 because we don't want to count on this one with the black swan. This kind of messes up the data, truly. So we're right here on September 1st. And I want to show you guys something. From September 1st throughout the end of the year, we see Bitcoin pretty much moved up around 70%. Remember, September 1st, 2016. We're going to go over here, do this ETH chart back to 2016 and see what is going on. So here we are. We're in September 1st. And we're going to, wow, we got something different, eh? So you see, during this time into the end of the year, Bitcoin and XRP behaved completely differently. You have a 40% correction into the end of 2016 from the eclipse for ETH. But Bitcoin, you went up. Interesting, right? So this is the perfect time to check in on Bitcoin dominance and see what's going on there. And then we can kind of, make more sense of this stuff. We're not going to look back at 2016 because that was silly. Bitcoin had about 97% dominance then. So we're going to do a zoom out and we're going to look at a fib that I had pulled from over here. Remember, we've been pretty much sideways in this whole range for about 800 days. About 750 days we were getting rejected at this level at around 49%. I pulled the fib from that level to the current low on September 8th, 2022, when Bitcoin dominance reached 38% at the lows. And we have the 1618 up here at 56%. And why this is important is because as of June, we broke above this long-term 750-day resistance level. We've also back tested it. So this tells me that before the end of the year, we could actually see Bitcoin dominance move up to 54 to 56%. Let's just call it 55% by about 2024 February, if I had to be exact. And look at where this trend line shows us to. Around the middle of February in 2024, we could see a 55, 56% dominance. Even if we're getting slightly below this trend line at the moment, it is a pretty valid trend. It's been going on all year. We don't need to give it so much accuracy when we're looking at a dominance chart, right? So just consider this, guys, with a Bitcoin ETF on the horizon. It wouldn't surprise me if that was to happen in like November, like early November, late October, probably early November though, after the next FOMC meeting. Take notes. This is important stuff. We can see a 40% drop on ETH, right? And I'm going to tell you a little bit more later about some of the other OG coins around this exact time, and it adds more weight to the situation. Also, if we were to check in with XRP back then, it was trading at like a fraction of a penny back in 2016 over here. But it wasn't that impressive either between September 2016 through the end of the year. Believe it or not, about 180 days between this time frame right here, it ended up going down about 10% loss. All the while Bitcoin went up 100% during that exact time frame. So you can see this moment here. Initially, XRP moved up into late October, but then corrected into the end of the year all the way until February. That aligns perfectly with what I just said about a Bitcoin dominance hitting 55% sometime into mid-February. We could actually see opportunities in XRP all the way until Q1 of 2024, which is great for us because that's accumulation opportunity, right? Side note, regarding that time frame for XRP in 2016, it exploded after that moment. After this choppy 6 months, it exploded. Literally just a straight line breakout. You could see it doesn't get much more parabolic than this. So this is why I personally plan to get in position fully with XRP earlier than this time frame, earlier than February. But I'm going to dollar cost average. That's what we do. We're going to be talking a lot about investment thesis for the rest of today's podcast. So what does this all mean in plain English? Well, step one, Bitcoin is likely to hold its 15K bottom back in November. It's more than likely that that is the bottom of this overall cycle. And any downside pressure will be sooner than later because it's a typical pattern that after our solar eclipse, we move up. Unless there's a black swan event, which we're always open to. See, a lot of people have been thinking that by us talking about a black swan, we're calling for it. That is not the case. It's to be prepared for one around this time. See, that's all that matters. It's not about calling the crash. No, it's about knowing how you will react to them. That's it. I hope that the real wolves in the community know this. And for those that are newer here, it's time. It's time you start realizing some of this stuff because we're moving into a new cycle. And too many people want it to be something and they never know how to react when the time comes. Even if somebody told you the exact truth of truths with pure accuracy, it does not mean that you will take action. We're here to work on the actionable phase, the actionable side of things, not to be banking on anything. This isn't the casino. Anywho, going to be breaking down a couple more things. Bitcoin investors that are here in the community can consider building initial positions and doing their initial dollar cost averaging into this solar eclipse with an expectation that after the solar eclipse, we should start to see Bitcoin moving back up to about 30K, probably within the month of November. And I talked about this also in prior videos that I made, that whatever corrections we get now, we can still see Bitcoin around the current yearly highs before the end of this year. I've said it many times, even in YouTube videos. So whatever we're going to get is short-term and opportunity. But for altcoins, it's a different story. And that's another thing that I've been very clear on. So as for altcoins, there's still plenty of opportunity for downside to accumulate over the next couple months. When I reviewed the last cycle of 2016 to 2017, Dash was down 25% for the following 3 months after the second solar eclipse. So that would be like, imagine after October 14th, we saw 3 months of a 25% correction for one of the top cryptos at the time. ETH and Monero dropped 40%. XRP was pretty neutral, but still ended the year sideways, and it was down about 10% over the next 6 months, as I mentioned earlier. All the while, Bitcoin went up 100%, okay? Bitcoin rose 70% after 100 days after the second eclipse, and by the time it got to peak, moving into the third eclipse, it was already breaking out. This is the complete opposite of what altcoins were doing. So altcoins were down pretty much, Bitcoin was on its way up, and then Bitcoin dominance looked accordingly. So I hope that all makes sense. I hope that simplifies things for people. And this way, for Bitcoin, we want to be positioned fully before the end of this year. That seems to be the optimal timing. And altcoins, we have much more time to accumulate, a little more wiggle room. And I'm sure that's music to everyone's ears, since most people are focused on altcoins anyways. And as for me personally, I am going to start selling my alts purposefully at a loss for tax loss harvesting in the 2023 year, with intent to buy back in a more simplified portfolio, keeping my portfolio about 40% Bitcoin, 15% ETH and XRP. That makes up about 70% of my overall portfolio. Then I'm looking to do about 5 to 10% gold. You could even consider a 50-50 between silver and gold if that's how you want to play it to diversify your precious metals portfolio. Then that remaining 20% will be miscellaneous altcoins, keeping it at 10 total assets maximum. Less is even better. So 80% of my portfolio would be Bitcoin, ETH, XRP, and gold. The other 6 positions making up the remaining 20% for a venture capital bag, about 3% per each holding. You could simplify it even further by just doing 4 positions at 5% each, adding up to 20%, which is more than likely what I will be doing. Simplicity is key. So that would give me 8 total positions, one of which being gold, the other one being 40% overall Bitcoin. That keeps things stupid simple, and it's a winning strategy. It makes it so that a majority between now and the next Bitcoin halving, I'm going to be in a very good position because Bitcoin tends to perform very well then. Also, I believe gold will do very well leading into the summertime next year. And I probably plan to do more of a trade on the gold thing. We'll see. I'm not entirely sure yet. I'll get into the specifics more as the year progresses, but I'm just letting people know that I'm finally open to gold as a part of my overall portfolio because I'm seeing lots of issues in just the financial system as a whole. So it could be lucrative for the timing and what's coming down the pipe with banking failures. You know, we could have some serious liquidity issues in the world regarding just the fiat system. And also, nobody really knows what's going to happen with the euro when they decide on the October timeframe with their CBDC. Because Christine Lagarde openly said that in the month of October, they're going to be making their decision for a digital euro. If they decide to do that, well, over 50% of the weight of the DXY is the euro. I don't know how that's going to affect shit, so I want to have some gold in case that was to be, negative on the DXY. I hope this is all making sense. There's a method to my madness. It keeps me in still plenty of altcoins. I'm just going with that 30% between XRP and ETH. And people could get even fancy if you would like. If you're not big on ETH, you can lower that and then go more XRP. You could do 25% XRP, and just do the rest ETH. And then still I'm recommending, not financial advice, I'm not a financial advisor. I'm recommending do not have too much more in other altcoins than your Ethereum play. Like, I get it. I know it's enticing with all these other alts, but not now, guys. We need to wait till we see Bitcoin price discovery to really start speculating on these smaller cap altcoins. This is just words of wisdom, and that's another pattern that we've seen in every other cycle too. After Bitcoin breaks 70K and it starts to come back down in its dominance, then you're going to see altcoins do really, really well. But that might take until August of next year. That's a full year away. So you see how I'm considering. It's the same thing that I said about the Shemitah. I said I want to be heavy Bitcoin, heavy fiat. Everything else I've de-risked, and I'm going to wait until I see some strength in the charts. I waited until that March 10th Black Swan. I started getting positioned again, de-risked accordingly, and now I even have a plan to make up for some of those capital gains I'm going to pay on that XRP play. That's what I shared earlier about the tax loss harvesting. I'm just being completely vulnerable and open with you guys, transparent, because I believe this stuff helps. It's more of a long-term idea, but we got to make moves in the short term too. We have a HODL portfolio, and then we have stuff that we're taking action on. When the market comes to you, you have to have a plan, and you always trade that plan. That's part about developing an investment thesis. And that's why my exit strategy blueprint that's included in my crypto mastermind course is so helpful, no matter where you're at in the cycle, but specifically in preparation for this next one. So I'm just letting people know, having the 8 total positions is more than enough to take a lot of advantage between now and the next Bitcoin all-time high. And then after that, we could get fancy by rolling over some of our Bitcoin and other things into the more speculative alts to play alt season. But we're not there yet, so let's not focus on alt season, all right? Just want you guys to stay in this mode right now where you're seeing things clearly. Remember what I just said. We saw 25 to 40% losses on a lot of the major altcoins after the second solar eclipse, which we're about to have. So the people that are banking on like all these gains following Bitcoin's gains, it's not proven itself to be the case because we're at a different phase in the cycle. I hope this makes sense. And I know this is a lot right now, but I just want to bring you the most value here on the Red Pill podcast. Well, let's get over to some of the TA. As I said, we're going to be doing a quick check-in on the Dow Jones. We had, nice correction into a level we spoke about and a lot of weakness on the weekly close, which ended up being the monthly close. And why I say that is because look at the size of this red candle. We even moved up a little bit before that rejection right back down. We had this trend line that I was talking about that was perfectly in alignment with the 618, the golden pocket. We've traded below it. We closed another lower low. That's not good into a monthly close, guys. So I'm just letting you know we tapped on this trend line, but if we close below this trend line that we have here, that could be a sign of danger. It was a resistance trend line going for technically 200 days. And now here we are after that back test, retesting it again about 95 days later. Remember what I told you about the number 95? It's 3 months, 3 weeks, 33. And then you have potential weekly open into this eclipse. We could start to see a little bit more pressure, even though it's a new moon. Overall, October, we tend to finish off pretty nicely unless we do have a harsh black swan happen. And there's been about 8 historic market crashes that have happened in the month of October. We'll let this one play itself out. There's a lot more room to the downside for something like the Dow, NASDAQ, S&P than there is for something like Bitcoin. And why? Because if you look at this Dow chart, look at the buyback all the way up to the almost 888 fib, but then you look at Bitcoin and we barely made it to the golden pocket. And this is very messy. Maybe I could show you this chart. See, you have your fib from the swing high, 69K, down to this swing low. We didn't even make it to the 0.5 fib. If we were to copy what the Dow did, we would have went up to 53,000. You see, we didn't get up that high. So Bitcoin has less room to the downside. Dow has way more room to the downside. Just consider this. It's very holistic in that fashion. We are back testing this key level of the 618. We've closed slightly below it. We're technically continuing a downtrend off of daily closes. And that would mean now we've been on this downtrend going on 2 full months. Not good. This is, let me turn off the noise. This might be one of the biggest red monthly candle closes we've had in a long, technically since February 2023. That's big. This is going to be the single largest bi-monthly close we've had since May 2022. If this goes down into the next month. It's not looking great for it was an overextended buyback relief rally. Too dramatic. Something's got to give. It has to come back down. So we're looking at the S&P. It's just a quick note on this because we already looked at the Dow. We've come to the 618. That was what I told you guys to anticipate. And then we have this key level down here, about 41.880. That would most likely be in the cards sooner than later. I would assume we could be having that tested probably on the eclipse, by the eclipse, or at least around it. You know, the Great American Eclipse Decoded is going to fill you in with so much information about the key dates after the eclipse. So you're going to have really just a stacked amount of information so much earlier than the average person. You know, mainstream media is going to wait to tell you about the problem. So that way you're caught with your pants down. But I like this level right here. It's a key level. Same sort of situation on the close for the S&P. Not looking so hot on this Friday. And then downtrend continuation. You see this weekly close that we just got in. Down again. Monthly, huge. 5% one of the biggest red monthly closes we just had for the S&P 500 since December 2022. That was almost a year ago, family. Horrible September, just as we anticipated. People like want crashes, and it's like, what more do you want? The market turns over slowly. You know, I know that there's been times where we get a 30% candle or we have like these, but this thing is happening. It's unfolding. You could see it in the charts. You just have to zoom out. You just have to pay attention to some of these nuances. All right, kind of like a bottoming candle on the NASDAQ though. But we can't really call it one until we break structure. It would require us to get above 15,500 on a weekly close and us to really call it that. But we did hold. This could turn out into a W. And if we looked at the timing of it, 50 days after, now that would not be weird. That would not be weird if we saw that work out similarly. We're into the beginning of November after the next FOMC. If there was to be some sort of relief into Christmas time, you know, kind of give you that Q4 end of the year relief rally, make you feel better. But if they're going to move this market down, it has to come sooner than later. I know I keep saying that, but that's just the essence here. And we already talked about downside targets for the traditional markets last time. Now, I want to do something really quickly on the Dow. I'm going to pull a reverse fib from this level right here up to the swing high, and then we're going to see where the 1618 lands. Oof. This is just for fun if we're going to have something really dramatic happen. I'm going to turn that blue. Okay, there you go, family. I pulled a reverse fib from this swing, from this low here in reverse up to this high, and it takes you right back down to 29,000, which is right there at, wow, that's perfect. Because it's right at the pivot of the end of the Shemitah. This red box is the Shemitah year. Of course, we bottomed perfectly into the end of it. What a surprise. And it's also right here in this point that we tested, we rose into before the C19 crash. And you see how dramatic this is. This is weekly candles, by the way. Look at where my cursor is. I'll extend a ray out for you to make it clean. You see? Right there at the pivot. Even got a little bit of a gap there. Filled it out into the end of the Shemitah correction. Have bounced since. If we were to come back down there, that would be a nice double bottom. So just keep that in mind. 29,000. It's a pretty steep correction, but that is one way of using the bearish fibs as a tool. That'd be another, let me see how much of a correction that'd be. Yeah, it's only an 18% correction. Like you look at the way that this correction was. This was an 18, okay, there you go, 19% correction right there into February. Let's look at right here. Got a 17. Some of these mini corrections along the way. It's not that big. Maybe here we got another one. There you go, about 18%. So the Dow does this shit all the time. It's just on a weekly structure for right here. 9/11 crash, got about 30%. Even here initially, look at that. That's a nasty, that was a 48-day correction. It looks tiny on a weekly chart, but that was about 18%. So we could easily have an 18% correction from right here. Pulling off the top. Yeah, that's nothing. That's normal. Let me see the timing on it though. Yeah, we're right about there. About 100 days before the beginning of November. And then November, December, more than likely going to be decent months. We look at the Bitcoin average performance. You see November is a really good month for Bitcoin. But it's funny because last November was horrible for Bitcoin. We saw how terrible Bitcoin's performance was at that time. Then you look at now, a lot of our all-time highs are hit into November, December. Also, during a pre-election year, you tend to have a pretty decent November, December. So that's the idea about positioning in Bitcoin specifically before that. Start of the new year. Going to be moving over to gold. Now, this is a crazy thing to see for me. We had a 4% correction on gold in a week. Let's see the last time this happened. This was the last time it happened, June of 2021. That was 800 days ago. And look at what's funny. That candle is actually within our trading range too. So we're looking at this gold chart on a weekly. We just had one of the single biggest corrections on a weekly close going back to 800 plus days ago. That's a huge sign of weakness. We had this pattern over here, which is somewhat of a falling wedge pattern, flag pattern, if you want to entertain that. We broke down through it though. I only was interested in this particular trend line right here because of this interaction, and then this hold. And we could clearly see rejections at this top trend line. And I was mostly looking at closes, not the wicks. This is a very dramatic reaction. Then we had this white trend line down here, which was a touch point. We have a touch point. We clearly broke through that really hardcore. So now we're going to kind of cancel out this noise. Don't worry about this so much. I want you to look at the horizontal range and almost look at it like a Wyckoff range. Now, we have a triple top. This is 2020, this is 2022, this is 2023. These are years apart, guys. And this is not a sign of strength for gold. But what it tells me is once gold can finally solidify a close above like 2,100 on a weekly, we should move up very quickly to the next level up, which would be about 2,400. In the meantime, we have a higher low structure. We have low here, technically higher low, but we're heading to that 0.5 fib. And that's a crucial area because I have this green line here mapped across the chart. If we start to close below 1,800, that's going to get rough. And I mapped out that level on purpose because if you look at the all-time gold fib, we have from this swing high over here down to this swing low, and that is the 888 fib, which aligns right above or right between the 382 and the 0.5. These are very key levels for me. So I think one of the best opportunities we're going to get on gold is probably somewhere there around 1777 to 1800. And I think 1800 is still crazy opportunity to get right now. Yeah, wow. Because to see another 3.5% correction on gold right now would be wild. But that's not weird because look, we have been perfect on these levels, swing high to swing low. Here was your SOS. We're still sort of in a backup phase. We know we're in a backup phase till we have our next LPS and SOS, and they're going to continue LPS, SOS over and over again. If you don't know about Wyckoff method, I teach it very thoroughly inside of my crypto mastermind course. And again, all of those courses are available to you guys for 20% off, biggest discount for my Patreon supporters. I'm just looking at this right now. We have a 236 back test. Then we head to the SOS. We're still in the backup phase. We've effectively backtested the 702 fib. That's one of my most important and favorite fib levels. Then we've shot up again, got this triple top going on, which could be a huge W pattern with this fake out bear trap. I call it a bear trap because I don't think gold is going to go below 1600. I think that's it. That's as low as it gets with those end of the Shemitah lows. So that's a good thing for anyone that was taking advantage of that, of course. But this is still a very long-term accumulation range. Needless to say, having this 702 backtest makes me think, well, if we're going to do one more major correction backtest, it's probably the 888. I don't know if we can get lower than that. I really don't. I don't know if gold will have the sell pressure to break that 382 in this local pull right here. I don't know. We are in a very weird environment. Very, very weird to see a 4% correction on gold right now. Anyways, it's all an opportunity for accumulation, securing the long-term wealth plan. So that's how I'm reacting to this. Any and all downside to me, I think, is an opportunity on gold. That's how I'm treating it. Got some of the levels though. I think 1800 is about as good of a gift as it gets. That's very conservative. It's a key level. Anything around that, plus or minus $20, Who cares, right? So that would mean anything at 1780 up to 1820, it's pretty much in the buying range. Let's look at silver. Silver's been very choppy, and it's been respecting this resistance hardcore ever since it hit this level up here in May 2011 at $47. So we know just to get back to all-time high is 100% gain on silver. Just throwing that out there right away. That's why before I was saying, if you want to do 50-50 gold, silver, that could be, an opportunity. Just, it's a lot of silver. Like, I mean, if you're buying physical, right? If you had let's just say you were buying, you had $2,000 total. You're going to do 1,000 each. You can't even get an ounce of gold with that. But $1,000 in silver, that's 45 coins, guys. 45 ounces of silver. You need to have room for that. You start getting into bars and all this stuff. I mean, I'm not a huge fan of the bars. It's considered illegal to have 10 grand of cash on you in the United States. Isn't that crazy? Yeah, I know. Pretty wild, man. So come up with your strategy of what you think is best for your precious metals and how you want to hold them and be a custodian of them. But the gold play seems a little bit easier. I know the ROI is there with the silver. That's why I brought up the 50-50 concept. And you could do that however you like, whatever you think is best for you, for your situation, for your style, for your flow state. Getting back to this, silver needs to break the 786 fib on a weekly close. I think more specifically, it needs to get above that 2850. $29. If you want to write that down, about $29. If we can see silver break a weekly close above that, that's going to be game time. And then it should go right to 40 pretty quick. In the meantime, where it could return down to, it could go below 20 again, depending. But I do think that 20 is in alignment with like an 1800 gold. So 1,800 per ounce gold is probably in alignment with like a $20 silver or lower. Let's look at when gold was down last time at that level. There we go. It was right there in that pivot to the failure of Silicon Valley Bank. And then look at the week that Silicon Valley Bank failed. It was right here. We see a 6.5% green candle on gold. So a banking failure was positive for gold. Look at right here. 10%. After Silicon Valley Bank failed, silver went up 27% in the same month, in one total trading month. So if another bank was to go down sometime in October, which would not be weird, look at how instantly responsive things like gold and silver are. 11%. These are big gains on precious metals. It has to be part of the wealth plan, I think, moving forward with things going digital. It's just I don't want to bank on it much, much more than something like 10% of my overall portfolio, because we've seen in the past what they've done to gold. They can literally make up laws to make it so that it's illegal to hold physical gold, especially bars and coins. That's why I want people to do their own research on this. Don't follow what I'm doing. Do your own research. For me, jewelry seems like the smarter bet. Just some words of wisdom here. But March 10th, we were down there somewhere around 1800. The same thing with silver. We were down there somewhere around 20. So that seems like a very nice level. I don't know if we'll be breaking structure. I don't know if it would be possible right now for a deeper swoop below 1750. It's more than likely the stock market gets slammed. And then look at how quickly off the black swan of the C19 crash, we saw the recovery in silver. It was literally right back at it in less than 3 months. 90 days later, it was right back and then was even positive after it, So black swans welcome. Anything is a buying opportunity. And if I had to break down what I would recommend for like the buying strategy, if you're somebody who doesn't want to wait for some sort of, black swan or crash, you can start your dollar cost averaging, break it down into 5 phases, have it be 2 phases soon, like over the next 2 weeks. And then if we do get a big event, then you could go more hardcore with your last 3 buy-ins and have those buy-ins quicker. right? This way you can manipulate it. Now, if we don't have any corrections, then you just keep going with your DCA and you're still getting positioned over the next 5 weeks, which brings you through the month of October. That would be my recommendation. I should probably write that down in a community post for everyone. I think that would be providing more clarity. And then no matter what happens, you're still getting positioned in a good time with good timing. We got to get to Bitcoin because this episode is getting long. Okay, so Bitcoin on this weekly close looking very solid, but still nothing to party about. We're still below the 382 fib. I told you on the daily chart, we are not really doing much until we close above 27,800. That would show signs of reversal. And let's look at some of the fibs on our monthly. Got to turn off the drawings. We still have our wolf cross on the monthly. We're below the 8 on the monthly. So again, that's something important to consider. We back tested the 55 on the monthly. I really like that. That's a structural, thing to consider after we get this wolf cross of the 8 above the 55. Bi-monthly. Yeah, we don't get there until October. Okay, so I'm not going to entertain that now. Let's look at bi-weekly. Technically, yeah, we're going to be getting there next week. Okay, we're still below the 8 though. That's not good. Okay, here we are. This weekly close, yeah. Getting it above the 8 is actually nice at this time because we've been below that now for, 49, 50 days pretty much. So getting back above that's a good sign. It's again more neutral around this time anyways regarding the pre-solar eclipse season. And that 8 is sitting at 26,700. It's good. Okay. So pretty much it's still just hovering around this 27K range. Let's look at the 5-day. Ooh, okay, yeah, we're getting the 8 and 55 starting to kiss, holding support here. That's actually pretty nice. But then we have this 200 exponential moving average being kind of like the axe that cuts it down every time it starts to approach that 27.3, 27.4 level. So I'm going to go ahead and say it right now. Getting a 5-day close above the 200 exponential would be a positive sign. And then to remain the wolf cross above the 55 below the 8 simple, excuse me. Yeah, we got some pressure at this 27 to 28K level, right? Like it's why we've been trapped here ever since we fell below. It's going on 7 weeks now. Let me look at the daily EMAs and see if we have a story. Okay, so here we have something positive actually underway, unless Bitcoin rolls over soon. We have the 13 EMA crossing slightly above the 34. That could be happening in the next couple of days, pretty clean. Then when this 21 crosses above the 34 on the daily, that would look very nice. It's the weekly. Okay, yeah, still below all the weekly EMAs, and the 13 is below the 21, so that's bearish. On the shorter time frame, we look like we're in recovery, but on the longer time frames, we're still showing signs of weakness. So we're just in that neutral territory now, guys. Like Bitcoin keeps doing this stair-stepping sideways pattern, and we're pretty much showing some neutrality at this moment. I'm going to leave it there. Really the top side level is we need to wait till we have 28 pierced to go up. And then also we have here this firmament dome pattern, which looks like Bitcoin's effectively just starting to break through now. But if we pull this trend line from the current yearly high off of this double test, here we got rejected off of it for like the last 4 daily candles. So I'm going to quickly delete this so you can see what I'm talking about. Okay. You see, rejection, all these 3 rejections in a row. It's showing me this trend line is strong right now. So we have this firmament dome we're breaking out of, but this doesn't mean that we can't get rejected here, have some sort of descending, broadening wedge, which gets back tested on the outside of this firmament, maybe like one more time before it bounces and breaks through both. But I think if the 382 on a weekly close can be captured, that's it. I think we're going to start heading on. And that would be pretty much in alignment with what we talked about with the October 14th eclipse. I would want to keep it safe and say that into the later in the month, it's when we would really start being more confident in this sort of stuff. And then in November, we should be back at 30K, 31K in November. But it's just October right now. We have 30 more days to get through. Let's go to ETH. It's going to be a quick summary on that because it's the same sort of story. ETH actually doing pretty nice, recovering a little bit. This could turn into a W in the short term, but no parties until we could break above this level right here, 1730, which is very similar to Bitcoin's 27,800. They would be in alignment at the same time. Let's look at the weekly, and there you go. What I just told you before. The daily, we're looking good. We're starting to look good, but when you look at the week, well, actually, this is 7 daily closes green. That's looking pretty nice. But when we look at the weekly, downtrend, high, lower high, still lower highs, and then we have our low and lower lows recently. And then we see the EMA band is above us, and we have not made any progress above it. So we're still low and in a negative essence. And this prior support here, before we had the micro bull trap, we are now gravitating, magnetizing back to it, but we've not recovered back into this range either. 1800 is really where you want to see ETH getting back to. It's sitting below 1700 right now. So I know we've had a nice 5% kind of bounce week, but yeah, it's just coming off of a 20% correction. Yeah, 16% correction. We need these to flip the other way. So we're still in a buying essence for ETH, and that is in alignment with what I shared earlier. Altcoins are next 115, 120 days are much better buying opportunities than where we're at now, perhaps, just because of the reaction that they have to the solar eclipse that's different than the way Bitcoin reacts to the solar eclipse. After the solar eclipse, Bitcoin should be up for the next 100 days after that into the yearly close. Let's look at XRP. Yeah, this whole proper party thing, I know people got really excited about it, but look at this correction off of it. We're down, 6% off of this gain. That was only a 2% gain on the daily close. And you look at this clean rejection level right here, perfectly mimicking September 20th. So this is a clean resistance, 52 cents for XRP. Pretty obvious now, right? We're going to go to the weekly and see what's up with that. There we go. We have right there about 52 cents as your 21 exponential on the weekly chart. That's a key level. Let's go to the daily. We're not really getting much of a story. This was not satisfying at all. That's why I didn't talk about this party thing. I didn't give it any prana because it has nothing to do with anything. We're right back where we were. Yeah. Although it was a flood ritual in New York, it's pretty wild. That all happened. I talked about that a little bit on my last live stream. Yeah, not too much to say here, guys. Even on the daily with this 34 above the 13 moving average, we need to get this 13 to cross above the 21, which it's about to, and then we need to see this in a bullish posture. Right now it's in a bearish posture where we have red, orange, blue. We want it to be blue, orange, red, where the 13 is at the top and the 34 is at the bottom. That's not the case right now. And you can see that although we're in that posture right now for the weekly chart, this fucked up all the data because we just had this glory candle. And these are lagging indicators, of course. And this asset, it's just too jumpy. And it came right back down to those same levels it was trading at before the SEC clarity. Okay, so we are bottoming, it looks. It really does have that essence. But what I said was that after the solar eclipse, we were pretty neutral with XRP. So we could actually be holding this 49 to 54 cent range for a while. And if we were to mimic, let's just say we were to hold this level right now and we were to drop 10% and mimic what we did in the last cycle, not the 2018 or 2019, but the one that happened back in 2016, it would be coming back to 46. It's showing me that this is a horizontal trading range that XRP might be hanging out in for some time, at least into the end of the year. So keep that in mind. Again, all great buying opportunities. And I know we spoke about a 42-cent XRP, but there's really no difference between 42 and 46. It's 10% in either direction. So if you are one of those people that are seeking to dollar cost average, you can just play the range. At the end of the day, we could be seeing a break of all-time highs for XRP by May of 2024. Just saying. So 50 cents to where it could be going in the $5 up to $15 range. That's nice to me. I mean, don't get overly, worried about getting more of a discount. We're heading over to Caspa now because we have to wrap up this podcast. Oh yeah, I remember this coin. So this coin's sitting at a new all-time high. This actually looks like the gold chart, similar in a way. Really interesting. Let's see really quick. Okay. Yeah, we got that 15. We're out of the year of the tiger. That 15 was powerful in this year. More of a different essence. Got that 79. That's literally tied to gold. Gold is the 79th element. 21 Saturnian 137, that's your 33rd prime number. Caspa equals 33 in full reduction, has that 33 transmutation, which is always going to come back to gold. Okay, yeah, interesting. Very interesting. This K symbolism backwards is really, really fascinating. It's the 11th letter in the alphabet. Has this type of green to it too, which doesn't surprise me. I know that tied back to Venus in a way. All right, but getting to this, I think the last time I shared any analysis on it, I said this is your key trend line to consider. I gave some downside levels, but then I also talked about the 1618, the golden ratio, and how that's most likely the target here. And if it's going to make its way up to that, you want to probably consider on the de-risking vibes, because this is unsustainable, what it's been doing in this 2023 year. Probably one of the few coins I've heard of doing what it's doing. Just 2,000, 3,000% gains. Look to the beginning of the calendar year, it's gone up a 10x. It's pretty wild. So congrats to anyone that's been in this. And if it breaks this major trend line right here, we could quickly be heading down to 2 cents, pretty much down to 2 cents. I'm not entirely sure what's going on with this. Very interesting. And I'm not sure if people in the community are just talking about it because of its performance. That tends to also be a thing. No offense to the community, but like whenever a coin's doing really well, like everyone just wants to talk about it. But there's not too much to say about something like this right now because it's not in a buying opportunity at all. Like I would not bet on this with this chart at all. It's what more do you have left? I mean, maybe if it continues up its bull run, it can go. Maybe. Yeah. So it's typical we get to about 4236, 5 fib. So if we were to buy in now, let's just say because this thing was gonna go, I'm being realistic right now. Let's just say this is actually gonna go into a bull run price discovery. You have about the 4.236, maybe the 6 fib. The 5 fib is kind of average, especially on these lower cap altcoins. That's a 200% gain from here. Okay, let's just entertain that. Let's entertain that. Now let's look at VeChain. Let's look at what 200% for VeChain looks like from here, where it's at today. Okay. So to get to the same level around that 230%, that would be like VeChain just getting back to the 0.5 fib. Now, if it was to go into a macro automatic rally, we're looking at about 500, 600, maybe 700%. If we were to get back to a double top, it would be about 1400%. You see why I would be more willing to gamble on this thing with this chart versus putting fresh money into something that's nearing its end. I mean, I get that people might be wanting this to go up much more, but it's not really how it goes. Yeah, but I mean, absolutely wild performance, isolated from everything else. I'm not really sure what the regulatory clarity on this will be like. I don't really know much about this project at all, but it's gravitating towards a key level in the fibs, this 1618. If it could break that and it goes up to this 5 or 6 fib, you got another 250% from where we're at as we film this video. It's not the craziest thing to get if that was all. If this is just having its own isolated bull run, that's pretty much what you'd get. But yeah, really fascinating to look at charts like this. Really, really fascinating. And we could check back in with it maybe in like 3 months and see where things are. In the short term, let's see where it was around March. Okay, so this is where it was at about March 10th. It's been up about 400% since then. Really, really interesting. This thing is like doing its own thing. I haven't seen many assets perform like this. So yeah, really not too much to say, just because you have some upside levels to consider. Naturally, this 1618 is typically where things stop out on these long-term horizontal trading ranges. I've given you the idea of it fulfilling a bull run target of the 5 fib. Sorry, it's rare that I even talk about the 5 or 6 fib anymore. I usually talk about it when we're in like alt season. But this thing, yeah, this back test on the 702 is pretty clean, man. I mean, after you do that, it's probably going to the 1618. I'll just be honest. And then above, I mean, you really start just entertaining what the blow off will look like. Even this looks very blow off vibes, but it only had a 70% correction after that. That's really strong. It's been stair stepping and snaking up this trend line for a while now. Okay, so we just have to see how this one goes. But I'm not interested in it at all. It's buying at the top, basically, to me. We're looking at LCX token. A very different story. So we have this thing has been in a pretty perpetual downtrend since it's launched. It bottomed out sometime around the end of the year, and then it had its automatic rally. So this thing is now heading towards the next phase after an AR, which is typically your spring, or you could have a double bottom if it holds and has a stronger reaction to all of this. Let me turn off these moving averages because it doesn't really matter with these sorts of charts. So there was a clear horizontal trend line that after the automatic rally, this gravitated to. Came back up, got rejected at another level that was very key. You can see instantly went to this level at around 7 cents, had a nice little run up, fake out, getting rejections along the 7 cent level a lot, even to here. And this was confirmation that this is now a resistance. We have this level here, which was holding as a support for quite a while in the short-term horizontal trading range. Again, gravitating back to it after this automatic rally. Couldn't hold it as support. We broke below it, and we've been on a obvious downtrend since June. Okay, so more than likely this thing is heading for a double bottom, and I don't want to touch anything like this because I told you before, over the next 3 months to 6 months, things can still continue to lose quite a bit of value. In the last cycle, we talked about potential 40% loss for ETH. Well, ETH did lose 40% back in 2016. Dash, Monero, those all lost 25 to 40%. That would be continuing this to price discovery to the downside if that was to take course. A 25% correction would just be a big double bottom, which is more kind of, and again, with regulations and all other things coming for this type of token. The one thing that I do see in the symbolism, though, is the X. So we're in the X year, basically, in the Gregorian year of 2024. It will confirm that. We have that great American eclipse coming up. So that X symbolism is definitely something to consider. But I don't love charts like this. This is not betting on a winning horse. It did not trade before the 2020 March crash, so we don't know what it could do regarding any fatal blows. And it's just kind of a poor performer overall. Decent automatic rally, though. It didn't give you too much time to get in. It was about, 2 weeks, and then it went on about a 400% run. Christmas tree top, and then right back down into the same range. So yeah, lots of weakness. This is a trader's coin. This is retail stuff. This is not smart money at all. We're moving on. I'm looking at Avalanche now. Oof, okay. AVAX broke the bottom. That is very interesting. So the ETH killer, as it was once called, we got a touch, another touch, and then another touch, but then rejection below it, breaking below it. And now you can see we've been consistently almost 50 trading days now, broken structure and getting right back to these backup phase lows and even lower. So here we had what would have been the overall crypto markets SOS phase, your backup phase, and then your buying climax. We're now breaking below that backup, and that is really not good, because if you see below this level, it's thin air all the way to $5. So this thing can go from 8 to 5 real fast, just like it went up from 5 to, look at how quickly it went from $5 to $14 in 10 days. It could drop just as hard. So this is rough. A similar thing to what I just said about the last project is it didn't have the pre-C19 market. We don't know how it could take a big hit. And now, after looking at this structure and what it's doing, I mean, yeah, we've had a full 95%, 94% correction. That's very normal with altcoins. But this is a sign of weakness, breaking below this horizontal support, breaking below $10, which is a psychological level. Now it could free fall straight to 5. Not good. So yeah, just keep that in mind. That opportunity could be around the 4 or 5 mark. I'm not sure, but there's really no trading volume at all between where it's currently at and $5. It's in no man's land right now, and that's pretty obvious here off the candlesticks. Now, if it was to have that type of breakdown and come up to, maybe around these levels here, the only reason I'm entertaining around $35 to $40 is because of this crown top distribution vibe over here, which when we broke below right here, we continued down to the selling climax. I mean, if we were to make it back up there, that'd be pretty decent, about 500 to 600% gains. And overall, if we were to just hold where we're at now and come into the golden pocket, that's about 600%. I don't know if I'd be entertaining a new all-time high for this project, though, in the future. But yeah, those are some of my thoughts. This is not a good sign, though. This is a sign of weakness. Now we're going to get over to Doggy Coin and wrap this one up. So we're looking at Doge. People are still quite interested in this project, again, tied to Elon Musk quite a bit exoterically. He's kind of the head honcho on the world stage right now, most popular man. And the whole move from Twitter to X Corp has been big. It's famous. I'm going to talk a lot about it in the Great American Eclipse Decoded. This Dogecoin now is about 470 days sideways, almost very similar to like a chain link chart. This was, in my opinion, the automatic rally. It had an insane bull run between the C19 moment and here in May 2021. If you look, we typically measure off of this type of sideways area, not the peak low, but right about there. And you see this project at 40,000% really quickly. So we anticipated a lesser powerful automatic rally. Again, this whole moment was tied to some Elon bullshit too. Look, it hit there in the year of the tiger, right around 15 cents. Tiger equals 15 in Gematria. We talked about that a lot in 2022. We had this level here that was holding as a support, and now it's showing weakness. So this is a resistance. This is a downtrend confirmed. If it starts to break below 5 cents, I think things are going to get scary. The spring is probably to 4 cents, and I guess the buying opportunity is 4. If it could hold, because if it breaks below 4, it's going to 2 or 1. Yeah, about 2 cents. That would be the 40% correction gets you to around 3, and it's thin air till, that'd be a 70% correction if it makes it down to 2. And that's possible, very, very possible. Oh, I should have looked. Let me look over here, family. So we're going to look at September 1st. This is your eclipse. No, we're in 20. We got to go to 2016, September 1st. Because I forgot this coin was trading back then. And we're going to go to the end of the year, pretty much. You see it kind of did what XRP did. Pretty neutral, still sort of down, but very sideways after the second solar eclipse in the solar cycle. While this coin lost 10% of its value and was sideways for 130 days, Bitcoin was up 100% during that time frame. So yeah, this is very sideways, very boring, losing volatility, no more excitement, no more memery. And I guess it's accumulation. Like, I really almost feel like this coin can't go anywhere if it's going to continue to be pumped up by the cult of Elon. You know, let's just be real here. He's very much the cult leader of the new generation. All the people that believe in outer space and NASA have even sort of given up on NASA, and they're like full-fledged following this guy's SpaceX scam. And then Neuralink is coming soon. All the changes with X.com is going to be towards the WeChat vibes. I mean, I talk a lot about it in the new Decode, but this is one of those projects that I suppose is probably not going to go anywhere. So if it made it down to there, an automatic rally would be a pretty nice move. I mean, off of this selling climax low so far this year, that'd be about 600% in alignment with what we see. What we see in a lot of iterations. So I'm going to leave it at there, family. No real party on Doge until it gets back above this 382. And in the meantime, I'm not expecting that to happen until probably the middle of next year. More of this vibe for now. And I'm going to be signing off now. I know this was a little bit longer than usual, but we had a lot to talk about in the beginning with some of the preparation for how we're anticipating the next couple weeks to go moving into the solar eclipse. I'm really excited to see what Bitcoin does in the short term, because I will probably be accumulating some. We'll see. I know I talked about selling some of my projects, but that's mostly focused on my alts for tax loss harvesting. I'm going to wrap this up here. Appreciate every single one of you. Much love.